FA2 Key Terms. Part B. Chapter 6. Control Accounts and the Correction of Errors. Control Account. A control account is an account in the general ledger in which a record is kept of the total value of a number of similar but individual items. Control accounts are used chiefly for trade receivables and payables. Receivable Ledger Control Account. A receivable ledger control account, also known as the receivables account and sometimes called a sales ledger control account or debtors control account, is an account in which records are kept of transactions involving all receivables in total. The balance on the receivables control account at any time will be the total amount due to the business at that time from its customers. Payables Ledger Control Account. A payables ledger control account, also known as the payables account and sometimes called a purchase ledger control account or creditors control account, is an account in which records are kept of transactions involving all payables in total, and the balance on this account at any time will be the total amount owed by the business at that time to its suppliers. Contra. If two businesses owe money to each other, they might agree to set one amount off against the other. This type of transaction is known as a contra. An error of transposition. An error of transposition is when two digits in an amount are accidentally recorded the wrong way round. For example, entering 47 instead of 74. Error of omission. An error of omission means failing to record a transaction at all, complete omission. Or making a debit or credit entry, but not the corresponding double entry, error of partial omission. Error of principle. An error of principle involves making a double entry in the belief that the transaction is being entered in the correct accounts, but subsequently finding out that the accounting entry breaks the rules of an accounting principle or concept. Errors of commission. Errors of commission are when the bookkeeper makes a mistake in carrying out his or her task of recording transactions in the accounts. Compensating errors. Compensating errors are errors which are, coincidentally, equal and opposite to one another. Error of original entry. An error of original entry means that the transaction was incorrectly recorded in a day book, leading to incorrect ledger postings. Error of reversal. An error of reversal occurs when the debit and credit postings are reversed. Suspense account. A suspense account is an account showing a balance equal to the difference in a trial balance. Bank reconciliation. A bank reconciliation is a comparison of a bank statement with the bank account in the general ledger. Differences between the balance on the bank statement and the balance in the ledger account will be errors or timing differences, and they should be identified and satisfactorily explained.